Hello there everybody, a very good afternoon to you all and welcome back to howtotrade.com and welcome back to another live stream here in our trading room and across our X, LinkedIn, Facebook and YouTube channels. It's good to see you all and I hope you are all having a good trading day so far. We are approaching the US Open and it's not normally a time that I stream, but I thought today we'll mix it up a little bit and I thought it would be a good time to come on around that US Open because we have such a such a big few days. We've had a big couple of days as well with the big tech earnings. So unfortunately, if you're not a trader of stocks, it's a bit of a difficult time for you, I imagine. But there is other news events as well. It's just a lot going on right now, and I can imagine it can be quite confusing. So hopefully we're able to simplify that for you and break that down for you nice and easily. If you are around across any of the channels, feel free to pop up and say hello, and feel free to pop up with any questions that you may have on the stream. Although I typically have I prepare what I'm going to say roughly. It is an open book as well. If people want to have questions, they have questions or concerns about anything to do with trading, then I always say, you can ask them on the stream, and I'll stop rambling on myself and answer them for you straight away. So make sure you do that and make the most of that time because I'm not on forever, of course. Hello to you guys in the trading room as well. Dibble, hello to you, and good afternoon to you, Bryn. It's good to see you. Ivy, hello to you. Could I please have your view on gold, silver and oil? And are you still short on oil? I am still short on oil on that account. And it's really frustrating me, oil. I think I might have to park oil on the trend rider. It's been an unsuccessful experiment. But anyway, we'll have a look at that as well, no problem. Dragon131, good morning to you. Good afternoon to you, sorry. I hope you're doing well. Gift on the YouTube channel, hello to you. Thank you for the message. I hope you're doing well. And let's dive into... let's dive into the things that's been requested first, because I like to put that as a priority, and then we'll speak about the other things that I think are important. The US Open is in 3 minutes time, so I'll let the price settle down, and we'll see how we open up for the US session. I think it's going to be quite a volatile open, but we'll see how it goes. Okay, gold, silver, and oil. Start on gold. I imagine people want to know my thoughts on gold. Well, we've broken out to a new high. You can see that on the hourly time frame. You can also see that on the 4-hour time frame. Just noticed, and I'd only call this I'm not even on the right thing. I'd only call this a change of character, right? I'd only call it a change of character. So I wouldn't call it a shift in the market structure just yet. But just seeing some signs of an initial early momentum shift in gold to the downside, where you can see where that market really failed to create any new high on that rally. Now, I actually thought that gold could be reaching 2,800. I'm surprised that it got up to 2,790 without a test of 2,800. I imagine that's the highs that it was going to be gunning for. Now, if we follow the sort of full structure of what we see right now, yes, we've had a little mini break there on the 1-hour time frame, but if I turn my Smart Money Concepts indicator on, I've noticed that there was quite a significant area of support here that comes in at around 2,750. So I actually think that potentially a good idea to try and really get in on this gold momentum would be to try and maybe utilize a really decent risk reward trade, which would be from just above 2,750. And I'd probably want to try and if you want to be conservative, you might want to try and cover this liquidity and this fair value gap in here. And if we targeted 2,800 as a result of that, it's about a 2.5 to 1 risk reward trade. If you want to maximize your risk reward, but as a result run the risk of potentially being stopped out, then you've got a 6.5 to 1 trade there. But the reason that I said about potentially covering this low as well is because you can see we've got equal lows there. And for me, equal lows are always at a liquidity target. So my concern is that the price may run down and grab the liquidity down here first, and maybe even come and test this area. So in order to, run the risk of that not happening, and again, there's more liquidity here as well in this area of consolidation, I actually think what we could see is gold prices sort of ignore and take the liquidity from this consolidation period and from this consolidation period, maybe come even down to 2736 before we get a reaction. But I'm certainly not going to come on here and say I'm bearish on gold, because it just doesn't make sense to be bearish on gold right now. It is quite a bullish market. So I think there's a similar sort of thing with silver prices as well. If we take a quick look at silver, you can see that we've got probably more of a bearish view. What I'm seeing here on silver is sort of what I like to call inducement, which is where you get a big trend, a big move, and then within that move you get sort of a mini change in structure. It basically is like a consolidation. So I imagine what silver might do for a bit is that, and what we need to then look for is the best way to do it is to spot the end of the inducement, which essentially is when we start to see the selling pressure become exhausted. The best way to do that is to spot RSI divergence. My RSI indicator's not working. When that comes, I'll let you know. I would say that probably if you're looking to sell these commodities, I'd say that silver might be a bit of a stronger sell than than gold. But again, I think you sell these at your own risk, really. So I do think that we could be seeing another wave higher, and I do think we could come up and test 35 on silver prices as well. But we may need to be patient and wait for that inducement to finish. Oil prices, as you can see, this is the trade that I'm in at the moment. I'm still alive in the trade off of that initial retest there, and that's why it's sometimes important to get that initial retest. I've also been placing my stop loss a little bit above the EMA 36, because sometimes you can get a liquidity sweep. I came pretty close to my stop loss. I showed you what the trade was. If I'd have placed my stop loss at the EMA 36, I would have maybe just been stopped out, depending on where I entered. But I'm just about alive in this trade. But I've sort of given up hope on it, really. I just think that maybe when we assess what the situation is, maybe the trend rider strategy isn't the best for oil, and that was the point of the experiment. I wanted to see if it works on oil, and I can't say it doesn't work, because I've had some success on it, but that's now 3 losses in a row, and that's cause for concern for me, because it just hasn't been respecting those EMAs as like your major forex pairs would have. So the reason as well, Ivy, that I do still hold that bearish view is because of what you're saying, because we have got the 50% of that FVG as resistance as well. So I actually think that's probably a stronger sell than the trend rider. So it's probably a bit of a note to me. If we've got a fair value gap, and that's sort of overall what I class as to be a good trend rider trade, especially considering it's untested on that. Hello to you, Evelina. It's good to see you as well. Thank you very much for the message. Okay, right. Let me just quickly head over to the stock market, or really the Nasdaq and things like that, just to see what the situation is at the moment. And it looks pretty. I know it's not on the screen at the moment. Just give me 2 seconds. It looks pretty. Looks pretty bearish, doesn't it? Wow. Okay, here we are. Just going to move that down to the 1 minute time frame. Oof. Quite a big move lower there. Unstoppable, hello to you. Good to see you. Thank you very much for the message on the YouTube channel. The US Open is now upon us, and the first 4 minutes of that have been pretty bearish. You can see quite a significant candle lower here on the 1 minute time frame. I'm just keeping an eye on that just to see if we can get some sort of reversal. Now, I've got a little bit of a I've got a little bit of an opinion on everything that's going on right now, and the opinion really stems from the big tech earnings that have come out this week and what's coming out. And I've just released an article on the How to Trade website, which I would recommend that you guys check out. And it's really a breakdown of what we've seen this week in the earnings reports, and a bit of a prediction from myself on what I expect in the ones coming out in the next 24 hours. Last night was Meta and Microsoft. Tonight is Apple and Amazon. probably say that tonight is probably a bit bigger than last night. And last night it was quite choppy, if you remember. Now, if you read this article, and I won't go through it all, but basically what I'm saying here is that if you looked at the Meta and Microsoft earnings yesterday, they were pretty incredible. We're talking billions and billions of pounds of revenue. We're talking beats on the Wall Street expectations, i.e. the actual figures coming above the forecasted figures. Yet the stocks fell. I find that really difficult to accept. My concern here is that the expectations for these stocks have now become so high that unless there's like astronomical figures which are just like way, way above the expectations, it almost always comes as a bit of a disappointment. It started to become that way. That's a bit of a concern for me. And so that's why I'm going to be studying the price action after these Q3 earnings are out to see if maybe what's just happening is there's an initial sell-off, but then the tech stock come roaring back once people realise that actually they are performing well. So really important tonight that we focus on the Apple and Amazon earnings. And the reason that I think it's really important is because not only because they're such huge companies, they're probably bigger than the companies that I've just released, is once again we've got a situation where the expectations for these earnings reports are pretty high. Apple stock is expected to release record revenue, same as Amazon. It's always expected to be better than this time last year. The forward guidance is really important, I have to say. I think when Microsoft come out yesterday and said that the OpenAI will cost a lot of money and it will take a hit on their revenue this quarter, I don't think investors like that. That's probably seen a little bit of a fall in the stock market as a result of that. And really my prediction for this NASDAQ is that for me, the bulls are really still in control. If you have a look at what I can see on the daily chart, I mean, it doesn't scream a bearish market to me. In fact, what you might notice is along the way, once the market sort of settled from the beginning of September, we've been on this sort of bull run at the moment, and the market does seem to have some aggressive days to the downside, and that's a sign of increased volatility, but the buyers do always seem to step in. So I think today's candle is really important, because I think if we close around this wick, then I think we're going to, if we see a full body candle closure down below 20,000, I think that what we could be shaping up for is a period of volatility and a period of downside. However, if what we see is similar to these examples, where you see these like big wicks to the downside or to the upside, and that's basically where buyers have stepped back in when that wick is created. And I think if we get something similar around where we are now, I think the buyers need to step in the next 150 to 200 points, or it could get quite messy for these tech traders like myself. Now, if we do manage to rally somewhat, like say for example, you see where this candle is at the moment, if we sort of just take that liquidity and we close back inside this range, it wouldn't surprise me if the buyers step in straight away and we get a move up towards this fair value gap. My other thought process is we might actually be in for a bit of a rough afternoon, and we may even get a move down towards 20,000. And then it's up to these tech earnings. Will they save the day? Will it be enough to reverse this, or will it disappoint like yesterday? And if we disappoint and we get, as I say, that candle closure, full body candle closure below 20,000, then I'm going to start to say, right, I think guys are in for maybe a 500 to 1,000 point drop here in the NASDAQ. So I think it's quite important that we really wait to see how today closes. So I'm doing that with a lot of interest. Okay, but I've always said, and it's a very common saying, is you don't bet against Wall Street, so you sell this at your own risk. I'd rather like sort of let the downside play out and then try and wait for a good area of support to bring that higher. Okay. Right then. The other thing I wanted to speak about today was yesterday we had the UK budget that was released, and lots of sighs and groans and moans from the public because taxes are going up by 40 billion in the UK.
And I just wanted to give you an overview, really, of what happened. And it's a post here by someone I follow called Eddie Donmez. This is his post. And I've spoken with him before, and he knows what he's talking about, shall we say. Now, in terms of and the reason I wanted to show you this post was because it outlines the GDP growth and the inflation forecasts for the next few years. And that's really what I think is going to move the needle. I don't think that the fact that pints are going to be 1p cheaper is going to move the pound, but I'm looking at how the pound could be performing in the next coming weeks or even coming days. And I looked at some of the GDP growth forecasts. 2024 is at 1.1%. That's expected to accelerate to 2% in 2025. So actually, the projections for economic growth are a lot higher next year than what they are for the next 5 years, which is a sign that maybe there's some strength in the UK economy coming, which I think could feed into some pound strength should that materialise. Because if you look at the inflation forecast as well, that is in line with inflation increasing as well. That might be the same across the board, like in the US, for example, as well. Like there may be a tick higher in inflation. And then, if you want to read more about the tax increases, capital gains tax has gone up by 8% in the lower rate and 4% on the higher rate, and all of this national insurance and stuff. I don't think that that's going to cause too much rift in the pound. We knew that the budget was coming for quite some time, and I think that people knew it was going to be. I think it's been labelled as painful for the UK public. I can't imagine that it's going to cause a massive impact in the pound in the short term. I think what would is this. Hikmet, hello to you from Azerbaijan. Gold and Bitcoin. I have already been through gold. This stream is recorded and posted in our trading room. So if you want to watch that in the past stream section, you can do so. Once that stream's finished, it will come up here. I have already touched on gold, and I am looking for some support around the 27 here, around this 2752 mark. There's some liquidity here that might be grabbed at the same time, so we could get a move down to 2736, and I think we could see some support from there. Okie dokie. And so, yes, I just wanted to quickly then touch on the pound versus the US dollar, which I know it's been a bit of a painful one to trade over the last over really this whole week. But I do see signs, and it's only initial signs of a bullish reversal here in the pound versus the US dollar. We've spoken about the RSI divergence on those lows. We've then managed to not go any lower than this. We've printed that low, and then we've actually started to just grind a little bit higher. And what's really important as well is that, if you're a trader of like channels and stuff like that, that descending channel where we've got that divergence, you can see we did break above it. We then come back inside and we're sort of hovering around it at the moment. What we do need to see is to be sure that we're going to see a bullish reversal in cables. We want to see, really now a close above that 1.304 level. If we can get a close above that, then I think we could start to trade this actually up to 1.32 or something like that, which would be like the 61.8% fib from that daily move. So I'm looking forward to potentially doing that. Other than that, I'm still short on the USD versus the Swiss franc, which I actually think is now showing some good signs. We just want to see that close below this wick, and then I think what we might see is a move down, hopefully for my trade, of course, that we see a move down all the way down there, but at least maybe down to 0.86 would be sort of the next area that I think that we could be hitting in the USD versus the Swiss franc. Okay, right. And just on Bitcoin as well, because I know that's been requested in here. So crypto and Bitcoin. Bitcoin's now up at 71,000. I mentioned how important that area was going to be. You can see what I had marked in one of the previous streams was this Fibonacci retracement from this high. Look at that reaction from the 38.2%. Absolutely textbook. There was the trade. This is how my strategy works. You can wait for that reaction, and then we come down and tested that demand zone again. And then if you hold on to that, look, you're reaping the rewards. Now, if you look what happened on Bitcoin, we can see now that we've actually cleared this liquidity up here at 72,000. And I'd say that was actually quite a solid close. So what we need to do now is I'm going to remove all of this, and I'm going to draw the next sort of area or next leg in this market. Now, the sensible one would be there, but I think we can be a bit more aggressive because this is now a bullish breakout in Bitcoin. So I think that potentially what we could see is potentially a move down towards 69, 70,000, something like that. And we can use that as support, or we can use this 38.2% again, and we can just have a carbon copy of that last trade where we saw a reaction, retest of an order block, and then boom. Hikmet says that Bitcoin is waiting or wanting Donald Trump, and of course we've got US elections around the corner as well, and it seems like the markets potentially have been pricing in a Trump win, and he seems to be ahead on the polls and stuff as well. So yeah, that should be interesting indeed. Right, okay, well, I think that just about sums it up for today. You can actually see now that we're now trading down towards 20,000 here on this NASDAQ. We've now just tested 20,100. If you look at the US 30 as well, that's lower on the day. The S&P 500 is lower on the day. European stocks, it's been a bearish start, that's for sure, on these stock markets, but they can turn around. So we'll wait to see if that is the case for today's session. Okay, right. So very important that we keep an eye on the tech earnings for today. That could change the goalpost, or it could continue this downside that we see. I'll keep you updated on that tomorrow when those earnings come out. So feel free to join me tomorrow when I'm doing NFP live. Yes, I'll be covering the non-farm payrolls data live for you. So hopefully you guys can come and join me on that one. Should be a really, really massive day. So I'm looking forward to that. So do trade well today, trade safe, and I'll catch you all for tomorrow's stream. Thank you very much.